You are listening to chartingwealth.com for Thursday, the 26th of April, 2018. We start always with the S&P 500. We see a red spinning top so far this week, 3 days into a 5-day candle. We see that the derivative oscillator is losing downward momentum, but the price percent oscillator still headed down. So we have a trend line that's still in a confirmed down move on the weekly. But as we move into the 2-day chart, we of course see that it is still in a confirmed up move, although we have blown through the 2-day trend line. We now have a strong, we have a down movement. It hasn't been established fully yet because we don't have a crossover going down, but we have 2 down candles, really 1.5 because we're just the first day into the latest 2-day candle. Derivative oscillators losing upward momentum, headed down. Price percent oscillator appears headed down, but until and unless there's a crossover, we don't call it. So we do want to see both our weekly and our 2-day moving in the same direction, so we have the possibility of getting into a trade. So if we have that 2-day cross, of course, it would then be moving in the same down position as the weekly. Hasn't happened yet. We'll continue to monitor that for you, let you know when that trading opportunity establishes itself for you to do a practice trade on the S&P. S&P crossed over going down on the 4-hour chart back on Friday in the afternoon. And of course, we saw strong down movement in the morning on this past Wednesday. That is Wednesday, the 25th of April, and then a bit of an up move in the afternoon. We'll continue to watch the S&P 500 and see what we see. Let's take a look next at the Qs. What's going on the NASDAQ 100? It is a red spinning top, again meaning indecision, tending down so far on the weekly chart. We see that the derivative oscillator is losing downward momentum, but that price percent oscillator, just like the S&P 500, is headed down. And again, things tend to move in the direction of the largest chart, all things being equal, and that is down, and particularly with that price percent oscillator heading down. That's what we see. Typically, the market continues to move in that direction, of course, until things change. What do we see on the 2-day chart? Well, we had a crossover going down on the 2-day candle ending on Tuesday, the 24th. And of course, so far, with the latest 2-day candle, the first day into it, on Wednesday, the 25th, we see down movement. Now, we will continue to watch for, before we go to the 4-hour chart, price percent oscillator headed down, derivative oscillator losing upward momentum, hasn't crossed over yet. We do like to see the derivative oscillator and the price percent oscillator cross over at the same time. We actually saw that happen on the 4-hour chart on the Qs back on Friday the 20th in the afternoon. Now, what are we waiting for at this point? Well, we want to see a pullback on the 4-hour chart, or even, the 4-hour chart, or even the 2-hour chart, and then a rotation back over in the same direction as the 2 larger charts. That would be the 2-day chart and the weekly chart for a jumping in point for a practice trade. And we'll keep you posted as soon as we see that shaping up. Remember, we trend follow. We're not out there trying to forecast what things are doing. We want to find a good trend, watch it establish itself, and then jump into it. The best way we typically do it is with a weekly vertical crossover in either direction, what we see shaping up, and that's a good segue into what's going on TLT, which is the 20-year bonds. We see a weekly vertical crossover. Looks like it's forming. Week's not over yet, but it may indeed occur. If it does, of course, we will let you know. If you're not already signed up for our texting service, you can do that. Simply subscribe to our daily market review, and you'll have instructions in that subscription. You can also check out our YouTube channel. In the show notes, you will see in every show instructions on how to sign up for our texting service, and the same at our website, chartingwealth.com. So we see what appears to be a weekly vertical crossover forming, and again, we'll call that on Friday if it occurs. Derivative oscillator losing momentum. Price percent oscillator appears to be crossing over going down. Hasn't happened yet, not confirming it. We have the makings of 3 strong down candles on the 2-day chart, and we had a crossover going down on that 2-day chart back on Friday the 20th. And again, so far for the first day of the latest 2-day candle, strong down movement on the 25th. Derivative oscillator gaining downward momentum. Price percent oscillator also headed down. And we had a sweet crossover there back on the 20th where derivative oscillator crossed over at the same time with the price percent oscillator. As we said before, we like to see that. 4-hour chart continuing to move down. Again, just keeps moving down, although the derivative oscillator is losing downward momentum. So we'll just continue to watch and see, and we'll let you know come Friday if we have a confirmed weekly vertical crossover going down. Lastly, we go into gold. Gold was down for the day 0.65%. And again, it's in a confirmed down move. Every time we think gold's going to cross over going up, as it has gotten close to many times over the last 4 or 5 weeks, it's never quite done it. Well, it's finally rolled over stronger going down. Price percent oscillator is kicking down. Derivative oscillator also is gaining some downward momentum at least 3 days into the latest 5-day candle. We look at the 2-day chart, and of course it crossed over going down on the 2-day candle ending on the 24th. And again, derivative oscillator and price percent oscillator crossed over at the same time. Always sweet to see. Typically means that move's going to last longer. And we're also at the point where we can start trying to redraw a decent 2-day trend line going down now that we have a new 2-day candle forming. And of course, derivative oscillator gaining momentum, price percent oscillator gaining momentum going down. What do we see on that 4-hour chart? It crossed over back in the morning on Thursday the 19th and really slid sideways for a couple of days, the 23rd and 24th, and then started moving down a little stronger in the morning on the 25th and then up a little in the afternoon. Again, still down for the day 0.65%. So we'll continue to keep our eye on gold and look for a pullback on the 4-hour chart or the 2-hour chart to give us a potential jumping in point. Folks, that's where we are as we end the day on Wednesday the 25th and go into Thursday the 26th of April. Again, if you've not already pre-ordered the book, Charting Your Way to Wealth, please do so. We just finished it. It is in the final stages of getting printed. We're approving the cover design right now, and we'll have it out in the next week or so. Appreciate everybody who's already pre-ordered them. Go ahead and do it if you'd like supporting what we do. We so appreciate your support. As you know, we've been putting out our channel for years now for absolutely free, and this is the first time we've had an opportunity to actually produce an object to sell to you in addition to our trade worksheet, and we would sure appreciate having your support. You can find the links at all the emails that go out, of course, also at the daily postings at chartingwealth.com and at our YouTube channel. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.